Hey traders, welcome back. Today we need to talk about a massive shift in the macro landscape that happened on April 10th. The March 2026 CPI report was a total shock to the system, showing headline inflation jumping 0.9% in a single month. This pushed the annual rate to 3.3%, marking the highest level we've seen in almost 2 years of cooling data. For months, the market was pricing in aggressive Fed rate cuts, but those hopes just took a major hit after this print. Energy prices were the primary driver, exploding 10.9% as the situation in Iran remains extremely volatile. Gasoline prices surged across the board, directly impacting consumer sentiment and keeping inflation much stickier than the Fed expected. The Bureau of Labor Statistics confirmed it. Almost all of the monthly spike came from energy. The Iran conflict and ongoing tensions around the Strait of Hormuz are keeping a massive premium on oil prices even during brief ceasefire windows. Yesterday's talks in Pakistan between the US and Iran ended with no deal. J.D. Vance said they didn't reach an agreement. Vice President J.D. Vance stated clearly that the negotiations didn't reach the breakthrough that investors were desperately hoping for this weekend. The Fed, headline CPI at 3.3%, makes aggressive rate cuts much less likely. While core CPI was milder at 2.6%, the energy surge acts as a drag on the entire economy, threatening to reverse months of progress. Looking at sectors, the energy trade through XLE and giants like Exxon and Chevron could see sustained momentum in the short term. On the flip side, tech and growth stocks are likely to face pressure as the market shifts back into a risk-off defensive posture. Treasury yields are already reacting, climbing higher, as bond traders adjust to the reality of higher-for-longer interest rate projections. Gold continues to hold its ground as a premier safe haven play, attracting capital from those worried about geopolitical escalation and inflation. For the traders watching this, precision is key right now. You need to be monitoring WTI crude oil levels every single hour. We are seeing WTI trading near $95. Remember, $100 is a massive psychological resistance zone for the market. This is the time to tighten your stops on broad market long positions. Don't let a single news headline wipe out your monthly gains. Monitor any new headlines from the Middle East. One escalation can move markets 1 to 2% in a single day. Personally, I'm staying very cautious. I'm not adding to major equity positions until the ceasefire situation in the Middle East clarifies. In the crypto space, Bitcoin is holding between $71,000 and $72,000, showing remarkable resilience. While it often follows risk-off sentiment in the short term, many institutional investors still see BTC as a hedge against sticky inflation. Watch how BTC reacts to the next macro data. Many still view it as protection against sticky inflation. For beginners, focus on simple support and resistance levels. Use the 1-hour time frame to identify where the big money is actually buying. Never trade against the VWAP bias. In this high inflation environment, staying above the daily volume-weighted average price is critical for longs. Stick to your 1% risk rule. Volatility is an opportunity for those with discipline, but a disaster for those trading too large. Watch for RSI range shifts. In an uptrend, we want to see the indicator holding between 40 and 80 to confirm momentum. Look for hidden divergences between price and RSI. This is often the first signal that a trend is about to exhaust or accelerate. Use the VIX as your market environment filter. If it's above 25, you need to be using smaller position sizes and wider stops. Volatility spikes often signal emotional extremes. Stay calm, stick to your edge, and remember that trading is a long-term statistical game. So, what do you think? Is this 3.3% print a temporary spike, or are we entering a much hotter inflationary period? I want to hear from you in the comments. Are you bullish on energy, staying defensive on stocks, or just loading up on more Bitcoin? If you found these insights helpful, make sure to like the video and subscribe. We are covering these macro shifts every single day to keep you ahead. Hit the notification bell so you don't miss our next update on the Iran situation and the learning modules for beginners. Trade safe, and I'll see you in the next one.